Producing over 500 hours per week of talk radio, GCN Live is a world leader in talk radio. Archives for the following program can be found at gcnlive.com.
The stocks discussed on Wall Street Raw are not in any way a recommendation or solicitation to buy, sell, or hold. If considering on acting on information, we first recommend you seek out a competent, licensed professional for advice.
What kingdom has sent you?
The kingdom of the Most High.
Nothing you have ever experienced can prepare you for the unbridled carnage you're about to witness. The Super Bowl, the World Series, they don't know what pressure is. In this building, it's either kill or be killed. You make no friends in the pits and you take no prisoners. 1 minute, you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The Genesis Communication Network is proud to bring you Wall Street Raw with nationally recognized market timer and previous Wall Street Week elf, Mark Leibovit, welcoming you on board his financial time machine. And here is the elf himself, Mark Leibovit.
Good morning, everyone. Good morning. It's Mark Leibovit, and welcome to Wall Street Raw on this Saturday morning, January 23rd. I know you have a lot of other choices out there. We're grateful that you chose to tune in this morning, and hopefully we can keep you entertained with all the what my friend Sinclair No mentioned earlier this week. Mr. Toad's wild ride, which is really what we saw in the market this past week. In fact, all the markets. Very interesting week. We'll get into details in just a moment. As a reminder, if you want more information about what I do, you can go to a number of URLs that all link to the same place. The easiest one would be vrtrader.com, vrvictorroberttrader.com, or you can go to wallstreetraw.com. or WallStreetRawRadio.com, and you learn a little bit about the fact that I have several newsletters. Been doing this for only about 35 years. We have our VR Platinum letter, which talks about the overall market, and we do have some specific trades in there for those of you who are interested in that. Our Silver is just our daily market commentary. And then we have a gold letter, which is covering the gold market and silver and commodities, all the natural resources. So that's certainly something you may want to check out if you're particularly focused on gold, silver, or even what's happening in the crude oil market. And, of course, we have our VR Forecaster, which is just about to come out, which is our annual forecast model for the year. And we are offering a special on that, so go to the website and check that out. But it's basically a once-a-year report, and it's been pretty good in calling some of the cyclical swings a year in advance. It's just one tool, of course, but we've been doing it since 1987. We built a bit of a reputation with that annual forecast model. My book, The Trader's Book of Volume, Definitive Guide to Volume Trading, is also available for those of you who want to learn more about all the volume indicators out there. And that's really what I'm all about. I started because I created this indicator called the volume reversal, and that's what VR is when you go to VR Trader. And we developed this when I was a floor trader back on the Chicago Board Options Exchange a lifetime ago. But basically it's based on the premise that volume precedes price, that any moves, most moves in stocks are triggered by a sudden shift from buyers to sellers or sellers to buyers. And over the years, it's kept me out of a lot of trouble. In fact, in my book, which I just mentioned, the Definitive Guide to Volume Trading, the book basically said the same thing in our introduction, The Trader's Book of Volume, where I indicated in the introduction that since the 80s, I have never, ever been caught in a market crash where it became a surprise to us. In fact, we saw it ahead of time with the volume patterns, and this includes 9/11 and the 2000 top with the internet bubble, most recent top, the flash crash in 2010, and all the other intervening events. So the market, speaks its own language. It tells you what's happening. In fact, the decline we saw in the markets this past couple, 3 weeks was signaled actually last May, and we start getting really cautious on the market, and this quote-unquote bear market or correction really started last May. So it's really multi-months old. It was masked a little bit because some of the indexes held up, and you had some big-name stocks. We joke about that, but the street talks about the FANG stocks, F-A-N-G, which is Facebook, Amazon, Netflix, and Google, and the high flyers, some of the biotechs held the market up. So it looked like the market was stronger than it was, but the internal market had been weak for many, many months. So the bubble burst, and everything started to come apart here in the last few weeks into January. Actually, we set the worst record, I think, in market history for the beginning of a year in terms of a decline. And I talked about the January barometer before, and we'll talk about that again as a leading indicator for the year. So getting back, VR Trader, you can pull up all those services. We also have this Vice letter, which covers the gaming stocks, alcohol, tobacco, and the new cannabis sector, which is growing spectacularly out there, and it will be legalized nationwide. It's already legal medically throughout Canada, and Trudeau got into Canada as a prime minister, as you probably know, and he wants to legalize marijuana recreationally all through Canada. So this is a reality of the marketplace, whether you agree with it or not. And what's most fascinating, I've talked about this before, is you got federally illegal here in the United States in terms of selling, buying marijuana, although we do have the states that have approved it internally, like Colorado and Washington, Oregon, and so forth. But at the same time, we have about 200 publicly traded stocks, mostly penny stocks, that are in the marijuana cannabis sector. So it's just fascinating that you've got something that supposedly is illegal on a Schedule 1 on a federal level, and then we have securities that are trading those companies and products. So that's what it's all about. I guess you follow the money, and that's really what we're trying to do here, if that's the action. And, of course, we have a whole group of medical marijuana stocks, and one of the big names is GW Pharmaceutical, which is now down quite a bit from its highs. But that was sort of the blue chip name, and we've been trading that a little bit, both in our Vice letter and our VR Trader Platinum letter. So that's something you got to keep in mind. There's always some good ones out there, and we're trying to find where the bull market is. And if we find those opportunities, we'll bring those to your attention. So, really quickly here, the market, as you know, had a significant sell-off. I had predicted for months on this show that we were going to take out or test the August lows in the S&P and other major indexes. And sure enough, that's what happened. Everybody was optimistic the end of last year. The Dow was sitting up flirting with the 18,000 level. And I kept saying, you better watch out, that 15,300 area in the Dow Industrials and that 1840 area in the S&P, which was those like mini crash lows we saw just this past August, could come out. And indeed, that's what's happened. And now we've bounced off that level. And it's unclear at the moment whether it's all over or not, because basically the action of the first few days of the year gave a pretty poor sense for the year as a whole. But we did see a washout. We are getting a little bounce here. So I'm less bearish right now. I'm sort of neutral here, slightly bullish, just watching the action. We saw a little bounce. In fact, very nice bounce in crude oil. We'll talk about that later in the show. That happened in the last couple trading days. Meanwhile, we had a bit of a rally mode going on just about everywhere, all the major world markets the last couple of days here. So we may have seen a little bit of a washout, and it could theoretically be over, and we could be bouncing around here a little bit and maybe start to move higher after we cleaned out a lot of the bulls early in January. But I'm not out there pounding the table. We're looking for opportunities, but it seems like a lot of the selling is behind us here short term. So with that in mind, we're just watching our indicators day to day here. We did jump into crude oil for a trade at VR Trader Platinum on Thursday and Friday for a quick trade, and it does seem like it wants to trade a little bit higher. And there has been a tie-in, as you know, with crude oil and the overall market. So that may continue here a bit. So stay tuned. We're going to have our good friend Sinclair Nell coming up here on segment 2, and my good friend Jeff Hirsch on segment 3.
You're listening to Wall Street Raw with Mark Leibovit. Go to WallStreetRawRadio.com for information on Mark's newsletters and products. Stay tuned. Mark will be right back. now you know that wireless technology like cell phones do in fact pose dangers to the health and privacy of everyone. Block-It Pocket's wide range of products are unmatched in providing the protection you deserve. No scare tactics, just common sense. BlockItPocket.com offers quality American-made options to alleviate and eliminate these invisible dangers. Learn more at BlockItPocket.com or call 888-315-9618. BlockItPocket.com, enhancing health and privacy.
We all know that Berkey Water Purification Systems are the most trusted name in water filtration. As an authorized Berkey dealer for over 6 years and serving thousands of satisfied customers, the Berkey Guy offers amazing specials for Berkey Water Filtration Systems. The Berkey Light Systems include a set of self-sterilizing and recleanable black purification elements that purify water by removing chlorine, pathogenic bacteria, cysts, and parasites to non-detectable levels and remove harmful chemicals such as herbicides and pesticides. Order the Berkey Light System today, complete with 2 black Berkey elements for only $231, and the Berkey Guy will ship your order free of charge. With the purchase of a Berkey Light, the Berkey Guy is also offering a set of fluoride and arsenic filters for only $39.99. That's over 30% off the retail price. Call the Berkey Guy at 1-877-886-3653. That's 1-877-886-3653. Or order online at GoBerkey.com. That's GoBerkey.com today.
Owe $10,000 or more to the IRS?
Get on board with the Tax Admiral. Don't pick on the IRS alone. I'll cut penalties and reduce your overall tax bill. Sometimes I can even get it zeroed out completely.
We're an A-rated company helping people clean up their mess with the IRS.
If you owe $10,000 or more, then call the Tax Admiral.
Call 800-287-7180. Again, that's 800-287-7180. 800-287-7180.
Hi, I'm Rick Ossick with Famous Footwear. Did you know that premature birth is the #1 killer of babies? That's why we support the March of Dimes in the fight against premature birth. Join us in supporting cutting-edge research, treatment programs, and outreach to help moms have full-term pregnancies and healthy babies. Learn how you can help save babies' lives at marchofdimes.org.
Don't complain about your cable bill going up and up and up. Do something about it. Grab a pencil and jot down this special number, 1-855-905-MY-TV. The more cable TV rates go up, the better digital satellite TV looks. Say goodbye to the cable guy and get more of your favorite channels in 100% digital quality for less money. Call 1-855-905-MY-TV. Sign up for packages starting as low as $19.99, and there's no equipment to buy. You get free HD TV upgrade, a free DVR upgrade, and free professional installation. You control what you watch when you watch it. Record your favorite shows. Pause and rewind live TV. Even skip the commercials. Watch local channels too. At just $19.99, what are you waiting for? Pull out your major credit or debit card. Call 1-855-905-MY-TV. 1-855-905-MY-TV. Say goodbye to the cable guy. Cut costs and get more. 1-855-905-MY-TV. 1-855-905-MY-TV.
So you've got to take a state construction license exam or certification. Can't decide on what books or what chapters to study? Discover right now how you can eliminate unnecessary books and wasted study time. At contractorexam.com, our study materials zero in on state-required test topics in an effective, multiple-choice format. So whether you're a plumber, electrician, general contractor, or other construction-related trade, contractorexam.com will help get you prepared. Visit us at www.contractorexam.com today.
Think positive. Never show any sign of weakness. Always go for the throat. Buy low, sell high. Fear, that's the other guy's problem.
Welcome back to the Wall Street Raw Radio Show with Mark Leibovit, your time machine for the financial markets. Want to know more? Go to WallStreetRawRadio.com. Now, here's the elf himself, Mark Leibovit.
Welcoming back my good friend Sinclair No from KFNN Phoenix 1510 and author of the blog EatTheBankers.com here on Wall Street Raw this Saturday morning. Thank you, Sinclair, for joining us again.
My pleasure. Good to see you, Mark.
Always a pleasure having you. Well, in your EatTheBankers.com blog this week, you talked about Wall Street looked like Mr. Toad's wild ride, and that was a little bit of a chuckle there, and it was exactly what has happened this week. The swings have been just unbelievable.
This has been the wildest market that I can think of. Of course, we start the year with the worst downturn on Wall Street to begin a year that we've seen, I believe, pretty much in history, depending upon which index or average you're looking at. And then this week we see some rallies. We saw actually a rally in oil from Wednesday to Friday that turned oil into a bull market again. It was just over a 20% gain in a matter of just a couple of days. That's crazy.
The price was so depressed that any little move could create that kind of gain, I guess, right?
Very oversold, and then we've been seeing pretty large swings in the oil market, but this just took place in a matter of 2 days, and boom, it's a bull market again. I don't really think that oil is in a bull market, really. I think this was just a really strong oversold bounce, maybe some short covering coming in there as well, whatever, but it was a substantial move.
I mean, is tail wagging the dog? We've seen this all year with crude oil in the stock market, right?
No, I think so. And you've got to wonder how much of that is just pure speculative traders taking over and saying, how much can we move the prices around to really, well, to borrow your phrase, ring the register.
I don't agree that all the economic data is good out there, Sinclair, but you wrote that the markets aren't responding to what appears to be improving economic data. Why did the markets act so poorly if the economic data you feel was getting better?
Well, let's start with why the markets have performed well over the past, nearly 7 years now. And I think you go back, first of all, to the central banks and the Federal Reserve. And you've seen the chart, I know, where you look at the Federal Reserve's balance sheet and compare that to the S&P 500. Looks like a mirror image. What does Wall Street love? They love free money. Where do they get it? From the Fed. And the Fed in December said, not so much free money anymore. We're going to charge you a little bit. Wall Street has a tantrum.
Big tantrum.
Big tantrum, yes. And now we'll see whether the whiny little kid wins the battle or the parents win the battle. Parents, theoretically here, being the central bank. Actually, that's not the best analogy I could use, because the central bank works for the big banks. I mean, they work together.
But all the central banks are in cahoots.
All of them.
I mean, Draghi comes out midweek and says something, how he's going to super cooperate and do whatever he needs to do. Then we get a little bounce in the market. So if Yellen doesn't do it, they get Draghi to say something.
Exactly. And then the idea that Draghi may have some stimulus in March or so means that the Federal Reserve can't be hiking rates again this year. Or at least not in the first half of this year, I wouldn't think.
We got a meeting coming up January 26th, 27th.
Yeah, they're not going to raise rates there. But the thought was that, well, maybe they'll do it at the next meeting. Initially, they were thinking, okay, they'll raise rates up to about 1%. That looks like it's probably off the table. We may be looking at one and done. And I know, Mark, you've even thrown out the idea that they may have to go back and cut rates.
I think they're going to do a QE4. I've been writing about this for 2 years. I mean, and in fact, some of the real serious jokesters out there have been talking about QE20. I mean, this is going to go on forever. I mean, it's just going to be QE after QE because the world is still in a deflationary spiral.
I remember writing years back about never-ending QE.
Right.
And that's really what I think we're looking at. I think we're looking at a situation where the Fed continues to prop up the markets again and again and again. But part of what happened was I think that the economy did recover from 7 years ago. I mean, if you're looking at January 2009 versus January 2016, I'd say the economy is much better today than it was in 2009.
I'll give you that, sure.
Okay. It doesn't mean it's great, in part because, and here's a big point, most of the corporations took the money from the Fed, and instead of reinvesting it back into their business and trying to grow their business and help the economy get stronger, no, they did some financial engineering, they did some stock buybacks, some other things like that. They upped the CEO pay, and they're saying, that's it. That's all they wanted. And now they're saying, now the economy might be slowing down again. I wonder why. Well, it's because you didn't reinvest in your business because you took CEO bonuses.
The financial engineering was a big part of this advance. No question about it.
It has been a big part, and a lot of it came from the Federal Reserve and the other central bankers. And now there's a little bit of imbalance between the Federal Reserve and the ECB and the People's Bank of China and the Bank of Japan. And if we're not careful, those others, China especially, could really see some problems with the differences that we've built between the Fed and the PBOC.
Still currency war going on worldwide. That's
absolutely
what it comes down to. And the question is, will the dollar continue to hold up? We'll find out. Well, Sinclair, we ran out of time, but thank you again. So much to talk about. We need to all look at eatthebankers.com on the Internet. It's a great blog that Sinclair hosts, and he's also here at KFNN 1510 as a great financial commentator for 20 years. So I appreciate your time, and thank you for joining us on Wall Street Raw.
Thank you, Mark.
Thank you. Thank you again, Sinclair. Well, I have my good friend Jeff Hirsch coming up here on the next segment. And it's a long story. I talk about it a little bit. We pre-taped the interview with Jeff, but his dad, Yale Hirsch, is one of the icons of the business. And actually, my book, The Trader's Book of Volume, I dedicated the book to him and another couple notables in the industry. And Jeff's following the path of his father, Yale, the January Barometer, the Stock Trader's Almanac. We'll talk about that in just a moment in the interview, but real pleasure having Jeff on board with us. And then following that, we'll talk a little bit more about the markets on segment 4. A lot to cover from this past week. A little bounce in stocks after a little bit of a selling climax midweek, so it should be real interesting what unfolds here into the end of the month, into early February. We tend to go a little bottom by early February historically anyway. Take care, and we'll speak to you in just a moment as you're listening to Wall Street Raw.
Go to WallStreetRawRadio.com for more information on Mark's newsletters and products. Stay tuned. Mark will be right back.
High-performance investors and traders use superior financial tools to achieve superior returns. You have that tool with Mark Leibovit, nationally renowned top market timer, legendary television Wall Street Week elf, and nightly business report market monitor, who shares with you his unique market tools and commentary at WallStreetRaw.com. At WallStreetRaw.com, Mark provides you with his latest ideas on how to help build and protect your wealth, help you avoid the next big market crash, and also stay healthy to enjoy your wealth. Mark has a special free gift for listeners of the Wall Street Raw radio show. Go to WallStreetRaw.com and sign up for his free weekly Vice News Raw report. While there, go ahead and sign up for his free Gold News Raw report. You will receive both weekly, and both are totally free. No credit card information is required. Sign up today for your free Vice News Raw and Gold News Raw reports at WallStreetRaw.com. That's WallStreetRaw.com.
The Genesis Communications Network is one of America's premier broadcasters of captivating talk radio. We thank you for listening. Now, just imagine, there are thousands of people who are just as passionate about radio as you are. But what you may not realize is how easy and affordable it is to advertise with us. Radio commercials for your business could be heard on hundreds of radio stations across the U.S. every day. We can help you by creating an effective radio advertising campaign for your company. From script writing to producing your commercials, commercial, just like the one you're listening to right now. No other network provides the level of customer service we do. When it comes to radio advertising, we are your one-stop shop. And no matter how big or small your business is, we can help. Email us at advertise@gcnlive.com, and an experienced advertising executive will help you take the first step towards driving more customers to your business or website. Advertise@gcnlive.com. Easy, affordable, effective.
Water is the single most important thing your body needs, so you want to be sure it's the best for you and your family. Since 2005, thousands have depended on Berkey purified water. The Berkey Guy provides the lowest priced filtration systems in every size. For incredibly delicious water now and in an emergency, get to GoBerkey.com or call 877-886-3653. 877-886-3653. GoBerkey.com.
Are you sneezing, coughing, and aching? Do you have a sore throat, a fever, or the sniffles? There's no reason to be sick this cold and flu season with immune system support from Supernatural Silver. Supernatural Silver can give your body the help it needs to fight off harmful pathogens without hurting beneficial gut flora and without leaving behind resistant bacteria. Antibiotics can damage good microflora and often leave behind bacteria which can cause problems later on. If you're sick of being sick, try Supernatural Silver. Supernatural Silver, the #1 choice of thousands for a safe and effective way to protect against the many diseases and illnesses that we are facing today. Go to supernaturalsilver.com, read our customer reviews, and see the life-changing results that people are having. That's supernaturalsilver.com. Supernaturalsilver.com. Use the promo code PROTECTED for 20% off your entire order. And like us on Facebook. Supernatural Silver.
Paid non-attorney spokesperson Adam Pileski of the Pileski Law Firm with principal office in Houston, Texas is the attorney responsible for the content of this ad. This ad is not legal advice, and the choice of a lawyer should not be based solely upon advertisement. Services may not be available in all states.
Attention Xarelto users. If you or a loved one took Xarelto and suffered a serious bleeding event, you may be entitled to financial compensation. Xarelto is a popular prescription blood thinner used to prevent blood clots and protect patients from strokes. These serious bleeding events have led to numerous cases of hospitalization and even death. Phone lines are open 24/7. Call 800-261-0937. That's 800-261-0937.
Anything that is thy neighbor.
Welcome back to Wall Street Raw. Want to know more about Wall Street Raw and the Leibovit VR newsletters? Go to WallStreetRawRadio.com.
Pleasure inviting a very special guest to Wall Street Raw this Saturday morning, an old friend, protege, Jeff Hirsch, whose dad, Yale Hirsch, is one of my great heroes of the stock market. The first book I ever read in the stock market was The Stock Trader's Almanac, going well back to the 1970s, I believe. In fact, I was in college at the time, and I was just getting interested in the stock market, and this really is one of the great vehicles that got me really interested in the business, and getting to know Yale in the years that followed was a great personal honor as well as an intellectual one, having learned a great deal from him. And the great honor for me was in 1987 when he dedicated that Stock Trader's Almanac, which 20 years prior, that was a book that I had first read. He had dedicated that edition, the 1987 edition, to me and 3 other market technicians. So that got my head spinning, thinking that I really had something to say about the stock market or knew something about the business. And in fact, my book, The Trader's Book of Volume, I dedicated the book to Yale and some other key people in the industry. But But the purpose of this interview is to talk to Jeff, his son, who's taken over the reins of the Stock Traders Almanac. And Jeff, thank you so much for being with us.
Oh, my pleasure. Thanks for having me, Mark.
So here we go. There's so much to talk about, and you've got some big shoes to fill with your dad, and you've done a great job. And I read all the reports you put out, and let's talk about the indicator that influenced me most over the years is the January barometer.
Well, the January barometer is not officially in yet. That comes in at the end of the month. It's the full month performance of the S&P 500. As the S&P 500 goes in January, so goes the year. This is the flagship indicator that Yale created in 1972, and it exists for mostly one reason, and one reason only, is the passage of the 20th Amendment to the Constitution, the lame duck amendment, which in 1933 took a few years to ratify and have an impact, but basically it moved new Congresses convening to the January right after they're elected instead of 13 months later in December, and it also moved Inauguration Day to January 20th. So it made January this month where all these political events and now also all of the financial analysis events, the forecasting and the moving of money, all compacted into the first month of the year, making it have quite an indicative and predictive value and effectiveness.
Well, we had the first 5 days of the year down, and that's part of the same theory, and that's not painting a very rosy picture.
It isn't. I mean, it's not the January barometer. The first 5 days is an early warning system, the Santa Claus rally, which is the 7-day period that's usually bullish the last 5 trading days of the year and the first 2 of the new year. And these days, one of the things we've done since Yale's time is sort of take a look at all these things together and not in a vacuum by themselves. So we call it sort of the January indicator trifecta now, where we'll see what the Santa Claus rally did. That was negative this year. And the first 5 days negative this year, in fact, the worst opening on record for the year. And then wait for the end of the full month, which is what the January barometer is, to make any sort of final adjustments to our analyses. And, honestly, coming into this year, as I wrote in this 2016 Almanac on page 6, if you've got your copy there, my comment was that I was pretty less than sanguine about the year, and there's several factors there aside from the technical and fundamental aspect of things. We've got this eighth year of presidential terms, where it's the sort of second election year, which has proved to be pretty abysmal. Granted, there's not the largest statistical sampling of presidents that were in office in their eighth year. A couple of them didn't quite make it to 8 years, like Nixon and McKinley. But since 1900, we've had 6 prior ones, and 5 of the 6 years were down, and the 1 year that was up, 88, when Reagan was in office and Bush the first was elected as the sitting vice president, that was only up a couple percent or so. So we've got this, lame duck issue where presidents spent all their political capital. We've got an open seat and this uncertainty that we're seeing right now. And if you watch any of the news cable news commentaries in the evenings or any time, and it's the battle with Trump and Cruz and Bernie and Hillary and Trump and all that stuff. I mean, it's creates an uncertainty that Wall Street doesn't like, and we're seeing that on top of the Fed tightening and China slowing down and commodities, going lower. So there's a lot of factors that we look at in addition to the January barometer.
Is there anything in the almanac that would indicate whether Republican or Democrat would get in after this election?
Yeah, clearly. Somebody asked me yesterday about, does this volatility, lean towards a more radical candidate? I said there's no evidence of that, but, a down year means basically the incumbent party's ousted. So, and we see the same thing with the first 5 months of the year being, better in an election year. When that first 5 months is down, it's really handicapping for a change of party. So, I mean, I was willing to have a little gentleman's bet with somebody to bet that, at this juncture, it'll be a Republican and it won't be Trump. But that was sort of, other
factors.
Other factors. But you know what? I'm impressed with his staying power. I'm not quite sure what to make of it, but he's not going away. And he's still leading in the polls. So the market tells me Republican right now. Something I used in 2012 to win a dinner from a relative that Obama was going to win again because the market was doing well in that election year. So, up markets mean incumbent parties stay in, and down markets usually mean that incumbent parties are ousted.
Jeff, you're going to be a guest speaker at the Traders Expo coming up in New York. Let's promote that a little bit. Tell me a little bit about what you're going to be doing there and when you're going to be speaking.
Yeah, I've got one sort of educational workshop, short 45-minute type thing, and then we're doing I did a 4-hour paid event in Vegas, and we're redoing it again, where it's basically trading 301 using all of our seasonal, cyclical, and fundamental and technical analyses, and rolling up our sleeves in sort of a, kind of a class type format where we'll be going through how we pick stocks and sector ETFs using seasonals and cycles and stock screening and technicals and that sort of thing.
So that will be February about 21st, 22nd at the Marriott Marquis in New York, right?
Yeah, the Tuesday, I think, is the day I'm doing that.
Jeff, real quickly, how do people reach you if they want to learn more about the Stock Traders Almanac?
Very difficult. StockTradersAlmanac.com.
That sounds easy.
And
Jeff Hirsch.
Twitter at Almanac Trader.
Okay, so StockTradersAlmanac.com, and what was the second address again, Jeff?
The Twitter account is at Almanac Trader. We have some fun on there.
Oh, great. We'll tune into that. Well, thank you for being with us, my good friend Jeff Hirsch. Don't forget to see him in New York if you happen to be there for the Traders Expo, and we'll have him back real soon. Jeff, thanks for joining us on Wall Street Raw.
Thank you.
Thank you again, Jeff. Really appreciate you taking a few moments here. And, of course, the impact of the January barometer is something that we're all watching. Of course, we only have a few more trading days in the year, and it's hard to believe that the market's going to recover all its losses since the end of the year. But anything is possible in this crazy business, so we'll stay tuned. But at the moment, it appears that we have a negative pattern for the year, get a bit of a dead cat bounce, and then find the markets pulling back once again. We'll go into more detail in segment 4 and wrap it up with the most active stocks for the week, and we'll be back to you at that time. Stay tuned.
You're listening to Wall Street Raw with Mark Leibovit. Go to WallStreetRawRadio.com for information on Mark's newsletters and products. Stay tuned. Mark will be right back.
High-performance investors and traders use superior financial tools to achieve superior returns. You have that tool with Mark Leibovit, nationally renowned top market timer, legendary television Wall Street Week elf, and nightly business report market monitor, who shares with you his unique market tools and commentary at WallStreetRaw.com. Here, Mark provides you with his latest ideas on how to help build and protect your wealth, help you avoid the next big market tsunami, and also stay healthy to enjoy your wealth. Mark has a special free gift for listeners of his Wall Street Raw radio show. Go to WallStreetRaw.com and sign up for his free Vice News Raw report. You will receive it weekly, and it is totally free. No credit card information is required, and no one will call. Sign up today for your free Vice News Raw report at WallStreetRaw.com. That's WallStreetRaw.com for your free weekly report from Mark Leibovit and WallStreetRaw.com.
Are you tired of commuting to a job that makes someone else rich, working harder than ever, but getting nowhere? Do you hate spending hundreds of dollars every week on daycare, having someone else raise your children? With our opportunities, you can start earning money as soon as next week. You get to be the boss, work from home, and live a happier life. At Be the Boss Network, you'll find hundreds of work-from-home opportunities that you can literally start today and be earning money as soon as next week. Go to freedom106.com and start earning money as soon as next week. You get to be the boss. Get out of the rat race. Work from home. Go to freedom106.com right now and change your life today. That's freedom106.com. Go to freedom106.com and start earning money as soon as next week. You be the boss. Go to freedom106.com.
This is Dan Pilla. Do you owe the IRS money you can't pay? Are tax debts crippling you? I've defended people from the IRS for over 30 years. I've helped thousands, and I can help you too. I wrote the book on IRS settlement, and I'm telling you, there's no such thing as a hopeless case. Call 800-34-NO-TAX to finally get free of IRS debt. With the IRS's new programs, there's never been a better time to solve your problem. Call 800-34-NO-TAX. That's 800-34-NO-TAX, or my website, danpilla.com.
Is negative content or comments on the web affecting your personal or professional reputation? Unfavorable comments, embarrassing pictures, videos, legal documents, and negative articles can ruin your personal life, your career, or your business. It happens a lot, and it's just not fair. But what can you do? Reputation Defender from Reputation.com can help you protect your good name. Get a free consultation now at 800-831-0771. That's 800-831-0771. Call right now for a free expert reputation analysis. It's easy to squash the unfair attacks with our patented system, and the analysis is absolutely free. Make the best things about you jump out in searches. Protect your personal and professional reputation, your business, and your income. Get your free reputation analysis from Reputation Defender right now. Call 800-831-0771. 800-831-0771. That's 800-831-0771. Or visit ReputationDefender.com.
A lot of people's lives and bodies are out of balance. AlkaVision Plasma pH drops optimize pH level and get rid of harmful waste and acid. Just a few drops in water restores vibrance and energy and gets you back in balance. Now order 2 bottles and get $10 off your order. Sign up for monthly auto shipping and save 25%. Call 800-518-7615 or visit ALKAvision.com. Alkalize your body. Supercharge your health at AlkaVision.com.
Responsibility begins and ends with our partners and our shareholders, and that's it.
There is no freedom without the law.
Get it? Got it? Good.
Welcome back to Wall Street Raw and the final segment with Mark Leibovit. Now, here's the elf himself.
Welcome back to Wall Street Raw, Saturday morning, January 23rd. I'm your host, Mark Leibovit. Thanks for joining us. And thank you again, Sinclair No, for your lucid comments on segment 2. And, of course, my friend Jeff Hirsch, who I hope to see in New York at the Traders Expo coming up the 3rd week of February. And as a bit of announcement, I do hit the road once in a while. And for those of you listening to the show, perhaps in Canada, I'm going to be in Vancouver next weekend at the World Outlook Conference as a keynote speaker at the Bayshore Western Hotel. It's a 2-day conference, an annual conference. Always look forward to doing that. And then we are having the Traders Expo. I'm going to be presenting there as well, as I just mentioned with Jeff, that runs in New York between the 20th and 23rd of February at the Marriott Marquis. So if you're in New York and you want to hear a free presentation, there's no admission to the Traders Expo. And then down to Orlando for the Money Show, March 2nd, where I'm also a guest speaker down there. And we're going to be doing our broadcasts from the road during this travel period. But always great to meet investors and see the enthusiasm out there, regardless of what direction the markets are going. Well, as you know, stock markets all over the world are in a rally mode here the last couple of days. We had a big washout on Wednesday. European shares enjoyed the biggest 2-day rally since 2011. It's sort of unbelievable, reporting this, considering how much disaster we've seen here in the last few weeks, but it just shows you how volatile the markets can be. And the question is this going to be like a V as in victory type reversal like we saw in August, where the market just plummeted and looked like the end of the world like it did mid this week, and suddenly it starts to turn higher. Too early to tell, but it's happened before, and we saw Mario Draghi come out during the week. They pull all stops. All the central bankers are in cahoots. I write about this all the time. We have rigged markets, so he had to come out and say something about how accommodative he was going to be going forward, and that was a little bit of a stimulus to the market. If it wasn't him, it would have been one of the Fed governors, or it would have been some comments from China or something coming out of Japan with the devaluation of the yen or something to stimulate the economy. And, of course, this coming week we have Janet Yellen reporting, I think it's on the 27th, with another FOMC meeting. I don't expect anything new, but you might expect to see some Fed governors out there, bolstering their comments about how optimistic they are, or maybe how they're going to slow down any rate increases that they were talking about. Very likely that could be the case. I've been writing for the last couple of years that I'm looking for a QE4. Ultimately, that could come, maybe not to the end of this year or early next year, and that could really get the stock market exploding again to the upside. So despite my bearishness up to this point, we did take out the August lows. There is a chance, I suppose, we can still come down again into mid-year, and I've been writing about that as well. But I think the bigger picture is that you've got, again, rigged markets. You've got financial engineering going on Wall Street, where companies buy back their own shares and reduce their float. You have near zero interest rates out there. A lot of ways to get the stock market up, and also a lot of the economic reports, which I've written about and told you about, are really not reporting the correct numbers out there, particularly unemployment. So again, with financial engineering and with the central bankers in cahoots, easily next couple of years, stocks are well into new highs and running up again. Ultimately we're going to pay the price for all this financial engineering unless the bottom line economies are doing better, and really that has not been the case, as we know. The Treasury market has been strong the last couple of weeks. I've been positive on Treasuries, a little more neutral here, but there is that risk that the Feds of the world are going to getting together. We saw the negative interest rate pattern in Europe. That could very well unfold here in the United States, meaning that the bond market could still be a place for your money, despite the fact rates are so low. Remember, the bonds are looking out in a longer time frame, and the Fed is on the very short end of the yield curve there. So the long bonds may still feel that there's more risk in the economy, flight to the safety issue, and we could still see a strong Treasury market ahead. And I'm sort of on the predictive scale here, talking about that for a while, that a negative interest rate, strong Treasury market are still things that could happen. Still on the bullish side with the gold market, still very depressed here. I think you're going to see a trade higher, whether it's a flight to safety, whether it's because the Fed decides to initiate a QE4. We do have, again, deflation occurring across the world, a flight of money into the U.S., but that also creates a lot of uncertainty. So despite the fact that the central bankers have been in cahoots trying to suppress the price of the metals for a long time, I think the force of gravity may be alleviated a bit here, and you could see crude oil bounce up along with gold and everything recover later in the year. So not throwing in the towel there by any stretch. But speaking of crude oil, big reversal there during the week. It got down to $26.19 a barrel, and suddenly by Friday we're trading up at $32. So as Sinclair mentioned in our segment 2 interview, 20% gain there. It was like a little bull market really fast in crude oil. My overall feeling about crude oil is around $30 or so. It should have been a floor. We got down to 26. Over the next year or so, you could see it trade back up perhaps into the 50s or even low 60s is a possibility. I don't know if the low we saw on Wednesday at 2016 is the low or not. Sure looked like a washout down there. My gut feeling it'll probably trade higher here, and then we'll come back and retest that. But we're more or less in a bottoming area. We've been hearing talk about, $15 oil and those kind of numbers. I guess anything is possible, but I don't think so. I think we might have seen most of it, and maybe one more push lower, maybe a couple bucks under that $26 area might be what might be seen here in the months ahead. So a lot of interesting stuff there. I think the big question for the start of the year is whether these low oil prices will drag the stock market down, or subsequently if a falling stock market will drag the economy into recession. As I said earlier, low oil prices are an aftermath of a recession, not a predictor. And when we look at existing home sales, which, by the way, have been improving, this is another indicator of a strong economy. So any discussion of the business cycle should pay close attention to consumer spending, and not just how many people are going to a local mall, but rather the big-ticket items items such as automobiles, which have finished a record year of sales this year, and even more important, private investment in residential real estate could be a good sign. So that, together with the Fed possibly acting or not acting, again, we're being set up, folks, for another big push higher. And the question is, were they going to drop it one more time into mid-year? So you have to keep your wits about you. We do trade a bit, as I mentioned earlier. We did trade some of the crude oil this week via an ETF in and out. So we're watching the markets, and we covered our shorts with regard to our inverse ETF midweek that we were playing for the Dow Jones at vrtrader.com. So we try to stay on top of these things. We do a pretty good job with Timer Digest ranking us in the top market timing category for many, many years. Meanwhile, we don't have a lot of time here left. We were going to look at some of the big point movers this week. On the bull side, you had NVR up 29.5 points. That's NVR Ord. AutoZone was up 15 and 3/4 points. That's AZO. We had Synoptics up, let's see here. It was up about 11 points. That's SYNA. Google was up about 10.5 points. That's GOOG. Canadian Pacific Railway was up 10 1/3 points. That's CP. Intuitive Surgical was up about 10.5 points. That's SIRG. So that's some of the big ones to the upside. On the downside this week, Alchemist, that's ALKS, was down 28.5 points. Sarepta, that's SRPT Therapeutics, was down about 20 points this week. Let's see here. Some of the other big names. Biogen was down about 11.5 points. That's BIIB. That's interesting because some of the biotech stocks and indexes are acting better earlier, and then they turn south. So we'll keep an eye on those as well, as biotech seemed to have been a big speculative bubble last year, but I guess if they get going again, that would be indication of more speculation, coming into the markets. Meanwhile, we have an interesting week again. Like to cover some of the cyclical patterns here. I'm looking ahead, believe it or not, the Chinese New Year, February 8th. It's the year of the fire monkey. That's coming up pretty soon here, and we have Groundhog Day on February 2nd. And why do I look at these? Because they often coincide with change points in the market. And speaking of the markets, my old friend Ed Hart used to say on the Financial News Network, we will know in the fullness of time. Speak to you next week. Thanks for tuning in to Wall Street Raw.
Thank you for listening to Wall Street Raw with nationally recognized market timer and previous Wall Street Week Out, Mark Leibovit. If you missed any of today's show or to get in touch with Mark, please go to WallStreetRawRadio.com. Any stocks or investment discussed on Wall Street Raw are not in any way a recommendation or solicitation to buy, sell, or hold. We first recommend you seek out a licensed financial professional for advice. Go to WallStreetRawRadio.com for more information on Mark's newsletters and products.
High-performance investors and traders use superior financial tools to achieve superior returns. You have that tool with Mark Leibovit, nationally renowned top market timer, legendary television Wall Street Week elf, and nightly business report market monitor, who shares with you his unique market tools and commentary at WallStreetRaw.com. At WallStreetRaw.com, Mark provides you with his latest ideas on how to help build and protect your wealth, help you avoid the next big market crash, and also stay healthy to enjoy your wealth. Mark has a special free gift for listeners of the Wall Street Raw radio show. Go to WallStreetRaw.com and sign up for his free weekly Vice News Raw report. While there, go ahead and sign up for his free Gold News Raw report. You will receive both weekly, and both are totally free. No credit card information is required. Sign up today for your free Vice News Raw and Gold News Raw reports at WallStreetRaw.com. That's WallStreetRaw.com.
As if chlorine in our water weren't bad enough, now they're adding ammonia?
It's true. Some municipalities are now adding ammonia plus chlorine to your water supply. It's a disinfectant called chloramine. But with a trusted Big Berkey water filter, you can keep chloramine out of your water. New NSF EPA certified lab tests show EPA Berkey water filters remove chloramines, pharmaceuticals, BPA, pesticides, bacteria and viruses, all forms of fluoride, and much more. Big Berkey water filters are the original and most trusted on the market. The gold standard in water purification. And our filters last for years at less than 2 cents per gallon. Big Berkey, the one that's powerful enough to purify stagnant pond water. Get your Big Berkey today. Call 1-877-99-BERKEY or click BigBerkeyWaterFilters.com. That's 1-877-99-BERKEY. Big Berkey Water Filters, for the love of clean water.